today's edition of Reboot India, we were joined by the MD and CEO of Mahindra Group, Mr. Anish Shah, who joins ET now to share his view on how the company is gearing up for a better growth now when we see that the economy is getting back in shape. What is the demand outlook, especially for the tractor sales, but at the same time, how the company is tackling the semiconductor shortage issue and lots more. Let's know about the highlights of this interview. Starting with the current shape of the economy, Mr. Shah says that the Indian economy is experiencing strong demand across sectors. The rural sales are quite robust at the time, and the tractor sales actually supplies them also in the month of June when the tractor sales were up 30% on the YOY basis. That means that the rural demand is holding up very strong. But on the other hand, the semiconductor chip shortage that has been impacting the auto companies globally, Mr. Shah says that it is a global phenomena and they expect some disruption over the next few months due to the chip shortage, but not any significant impact as of now on Mahindra and Mahindra. So that's a positive comment, but they are currently working with their suppliers to get this issue resolved in the shortest time possible, and currently the company is quite in a comfortable position, but not to a point that when they say that the problem is behind them, because the company is expecting good launches like the XUV 700 and the new Scorpio. So these are the most awaited launches from Mahindra and Mahindra, which might see really good demand, and also the existing products of the company are in good demand. So to cater to all of these, the company needs the semiconductor chips, which are not in the full supply right now. But looking beyond this challenge, the company plans to disrupt the EV space. The company has already planned a capex of around 300 crores in the EV space, and they expect that the EV space will see a lot of changes in the next 2 to 3 years, and they will also looking for partners where they look to work upon in the EV space with technology setup, battery management and charging infrastructure setup to be built up. And there are many opportunities in the EV space where the company plans and wishes to disrupt going ahead. But to create more value for their shareholders, the company has a very clear focus as of now. In the recent times, we see that the investment strategy for Mahindra and Mahindra has changed, and going forward, what all cash flow that the company will be generating, they have a very clear focus that they will invest only in those ideas which might give them very high returns, and if not, then the company will actually give it back to their shareholders. But also in the near future, the company informs that they have a very high level of preparedness for the third COVID wave, but at the same time they are not expecting one. The operationals as of now have normalized across geographies, and the production levels are somewhat back to normal. Now talking about the commodity price rise that has been hitting the margins of the auto companies across, M&M expects that the commodity prices and the high freight rates will stabilize over the next few months, and as of now they see that the commodity price and the high freight rates are an aspect of demand. But going ahead, when this will normalize, the freight rates and commodity prices might normalize as well. But shifting gears from auto, the M&M sees that the Indian IT sector is witnessing a second growth wave in the running decade, and not only that, commenting on the sunrise sectors for the Indian economy over the next decade, M&M finds pharma and auto industry to be the outperformers amongst the rest.